Hey guys, it's that Dividend guy coming at you with another Robinhood portfolio update. Hopefully, everybody had a great green day in the market. You know, I always wish the best for my viewers and subscribers. Speaking of subscribers, if you haven't hit the subscribe button yet, go ahead and hit the red subscribe button and the bell icon so you stay updated. I post portfolio updates Monday through Friday. I try to be one of the most consistent YouTube channels here on the platform in the financial space. So if you guys appreciate consistency and the daily grind that it takes to get these videos out, please hit the subscribe button. It really does make a huge difference. So today, as you can see, we are down about $300. For the week, we are down 787. The month, we're down about 1,050. 3 month, we're down 2,200. 1 year, we're down 1,700, and all time we're down 832. So that is, I think, the reddest we have been in a while. And we'll figure out why that is when we look at the portfolio. But look at that, down to 17K. Now we're at to 19, and our high, I believe, is like 23. Yeah, a little bit more than 23K. So fluctuation is part of the game. And I know I said this yesterday, but I will repeat it. Fluctuation is part of the game, right? I know I'm going to have to deal with that. I don't lose sleep over it, and I think it's fun. When your portfolio is down like this, it means that there are deals within your portfolio that you should be taking advantage of, as long as you still believe in those companies. So, first we have Realty Income, Dividend Aristocrat, my favorite real estate stock on the entire market. We have 15 shares, about $870 of market value. Average cost is $45.38. 4.4% of the portfolio is in Realty Income, up $190, up 28% on that holding. Love this company. Next, we have Altria. Dividend King, 149 shares, $5,500 of market value. Average cost is $43.61. 28% of the portfolio is in Altria, down about $980, down 15%. Not worried about it. Great value right now, great cost down average opportunity that I wish I could take advantage of. But as you guys can see, I already have 28% of the portfolio in Altria, so it would have to drop pretty low for me to consider buying it, simply because I'm already very over allocated to that position. Next, we have Coca-Cola, a Dividend King, 20 shares, $960 of market value. Average cost is 51.26. About 5% of the portfolio is in Coca-Cola. This is one of my favorite stocks. Down $62, almost $63 overall, down 6.13%. This is also a great cost on average opportunity, not as drastic as the other holdings for this set of months, but it's still a good company, quality company that I would love to add more to. Next, we have FRT. They are a quality REIT, the only Dividend King that is a REIT. So they know what they're doing when it comes to raising their dividend. We have one share, 67.91 on market value. Average cost is 113.40. 0.35% of the portfolio is in FRT, down 45.49, down 40% on this investment. Not worried about it. As you guys can see, one share. I could easily buy some more shares with dividends, and I might just do that. This is actually such a good glaring deal that I might have to break my rule. Instead of buying Coca-Cola, I might need to buy FRT, simply because buying two shares is enough to really deflate my cost down to a more comfortable level for me, and I still get that nice dividend. So next, we are on to the second set of months with Lowe's, Dividend King. We have two shares, 320 of market value. Average cost is $100.86. 1.65% of the portfolio is in Lowe's, up 121.30, up 60%. So it kind of makes up for FRT. We do have a dividend coming in from Lowe's at 120, and they did do a generous dividend increase of, I think it was 9%. But again, we only have two shares, so it's not a huge increase. It doesn't affect the portfolio a lot, but it's still nice to own quality dividend companies. That's what this is all about, is the increases over time. So the longer you hold quality, the better quality is going to pay you, and that's Lowe's is definitely one of those. One of those companies. I just wish that I would have bought a little bit more when it was at such a great price. Next, we have AT&T, Dividend Aristocrat. This is my goal stock for this set of months, and it's one of my favorite stocks. We have 126 shares, $3,300 of market value. Average cost is $29.68. 17% of the portfolio is in AT&T. We have a negative balance right now, down about $400, down 10.5%. Not worried about it though. It's quality Dividend Aristocrat. We have $65.52 coming to us on November 2nd, and that will be poured into ExxonMobil stock. Next, we have AbbVie. It's down a little bit, $81. Still not down enough for me though. We have 60 shares, $4,860 in market value, right on the dot. 72.22 is our average cost. About 25% of the portfolio is in AbbVie, and we're up 526.64, up 12.15%. This is one of those that I'm over allocated in as well. I'm trying to use AT&T to kind of even this out, but I bought a big position when they were down, and I'm happy I did. I know I'm over allocated, but it doesn't bother me. They pay a quality dividend, and it's one of those that I'm using to fund more stocks. So it was a great buy when I did it, and it's one of those that I'm very proud that I took advantage. I'm in reallocated funds like I did. Next is PBCT. Dividend Aristocrat. It's a bank. It's a financial stock. 13 shares. 136.89 is our market value. Average cost is 10.80. 0.7% of the portfolio is in PBCT. And we're down $3.51, down 2.5%. I want to thank the Dividend Diplomats. They're another YouTube channel in the finance space that I watch consistently. They actually brought this stock to my attention. I had kind of sworn off the financial sector. Besides, I've looked into Visa and MasterCard, but other than that, the only other financial company that I was looking into was Aflac Insurance. So when I saw there was a quality bank that had a Dividend Aristocrat status after being burned by Wells Fargo so badly, you guys can watch. There's a video. I could even link it down in the description. I bought a decent portion. I think it was like 60 or so shares. I think it was maybe 40 shares of Wells Fargo. And at the price that I had it, I was dividend deficient because it was about $20 a share, $25 a share, paying 52 cents per share. So I had enough to be dividend deficient. Well, then they cut the dividend. And my rule of thumb is if a company cuts the dividend to a rate that it no longer makes sense to own it, of course I sell it. Or if the position is so overvalued that I'm never going to be able to buy shares again, or I feel like it'll be a while, I'll just sell it and reallocate those funds as well. That's what happened with Target. But the issue with Wells Fargo was it kind of left a bad taste in my mouth, so I didn't really want to add a bank. But according to the Dividend Diplomats, sorry, sorry, I got a text. According to the Dividend Diplomats, I noticed that this was a quality bank that had paid dividends for 25 years, and I wanted to give it a shot. So I added shares with Altria's money, so interest on my money, which is the dividend payment, paid for these. So I'm more comfortable holding it. We'll see. I don't think it will ever be a huge position in the portfolio, considering that we do have AbbVie being a pretty big position. We have AT&T, and we do have a quality company in Lowe's there as well. Sorry, I have my friend texting me. But I'm happy to own PBCT, and thank you, Dividend Diplomats, for bringing this stock to my attention. Again, guys, never buy a company because you see it on YouTube. None of these videos are financial advice. I'm just sharing my opinions on the stocks I own, right, and stocks I'm looking to own. But it is really important that you use other YouTubers to find stocks, right? To find other investment options and learn more about other people and why they invest the way they do. And that might rub off on you and help you in your investing journey, which is exactly what happened with the Dividend Diplomat. So I'm happy to own PBCT. I like the balance sheet. I like the payout ratio. And I like that it kind of fixed my uneasiness towards bank stocks. Next, we have the next set of months with J&J and a quality dividend king. We have two shares. 277.82 is our market value. Average cost is 135.79. 1.42% of the portfolio is in J&J. We're up $6.24, up 2.3% on J&J. Followed by another king in 3M. We have two shares. 317.06 is our market value. Average cost is 147.28. 1.62% of the portfolio is in 3M. We're up 22.51, up 7.64% on 3M. Then we have Walgreens. We have 6 shares of this quality dividend aristocrat. 207.96 is our market value. Average cost is 39.92. 1.06% of the portfolio is in Walgreens. We're down to 31.53, down 13.17% on Walgreens. Again, this is one of those that the Dividend Diplomats actually just talked about. I've owned it and I've sold it before, but it's definitely staying in the portfolio. It's got like 43 years, I think, of dividend increases, so it's very close to king status. It should hit it by the time I think I'm like 32, I think, maybe even sooner. I might not be accurate on the number of consecutive years, but it's relatively close. I think it pays a better dividend now because the stock price has gone down. Before it was one of those that I bought it because it was lower than everything else because Exxon was near my average cost, but now I think Exxon is a way better buy. It pays a double dividend compared to Walgreens, so it pays nearly double for a lower price right now. So it's a no-brainer. The money's got to go to Exxon versus Walgreens, but I still want Walgreens to be a decent position in the portfolio, and I'm happy that I got into it when I did. Next is the goal stock for this set of months, which I know it's supposed to be Aflac, but I changed it to ExxonMobil because of how far it's down. So I've had so many people DM me about the headwinds with oil and if I was worried about it and if I'm losing sleep over it. I could care less. As long as they have the cash to cover their dividend, which they also have other ventures besides just oil. That's why I picked Exxon. They have alternative fuel research and a bunch of. They're just super diversified and they're not focused on one thing. They're expanding, which are the companies that I look for. I want to find companies that are diversified within themselves so I don't have to own multiple, right? I don't want to have to own Exxon and Chevron and BP and Shell. I want to pick what I think is best of breed, which I do think Exxon is. I think it beats Chevron out by a little bit because of the dividend increase history. Um, and I just want to hold quality that pays me, and I think that's what ExxonMobil is. So I have 84 shares. Um, 20 about $2,700 of market value. Average cost is 53.20. 13.71% of the portfolio is in ExxonMobil. We're down 1781.07, down about 40% on ExxonMobil, which is funny because my first tranche or first time I bought it, I think I bought like 30 shares and I kept doing it and I kept cost down averaging thinking, oh, this is going to be the lowest it goes. This is going to be the lowest it goes. And now it's sitting at like 32. So it's about where, AT&T was, and it pays a better dividend as well than AT&T. So right now I'm like ticked because I can't invest because I'm starting my new job, but I am allocating money towards savings first. So I'm in a better position financially before I start pouring money into the market again, trying to be more responsible because I'm over leveraged to the market. But I wish I could buy Exxon. I would be buying crazy amounts of the stock right now because I still believe in it. And I want to add more. So to anybody asking, am I worried about oil? No, I'm honestly not. In fact, if I could, I would be buying it. The time to buy stocks, as hard as this is mentally to actually execute on, I've gotten more used to it. It's better to buy stocks when they're out of favor with the market, which oil is. Travel stocks are. Of course, it's not financial advice, but if I was if I had the money, that's where I'd be putting it. Would be in the stocks that are down the most. The issue that I'm running into as an investor is the stocks that are down right now are the stocks that were down before, right? Altria was slammed. That's why I have, 100 and almost 150 shares. AT&T was slammed. That's and after it peaked up, perked up a little bit, it got slammed again. That's why I have 126 shares. ExxonMobil has done nothing but get slammed every month that it's been this month. 3, 6, 9, 12. This has been the stock that's been down more than anything else. The only reason I bought Walgreens was because the ex dividend date, I got paid for it instead of Exxon. Exxon's date was after Walgreens, I believe. That's why I bought it. So I'm not worried about the headwinds for oil. I'm still very bullish on it, and if I could, I'd allocate more funds toward the position. Sorry, I didn't mean to go on a huge rant there, guys, but I've been getting constant DMs on Instagram, and I've seen it in the comments on some videos as well. So I'm not worried about oil, and that's honestly, guys, where the portfolio is down huge too. Next, we have Aflac. We got one share. Quality dividend aristocrat here, $34.75. 35.75 is our average cost. 0.18% of the portfolio is in Aflac stock. We're down $1, 2.8%. So, not bad there. This is one of those. This is my goal stock. It's supposed to be my goal stock for this this set of months, and I still think it should be. I'm trying to get my allocation healthier because I'm way too focused on those three stocks. But guys, those are the ones that have been down so much, and I feel like I had an intrinsic value calculated for those stocks, and they're below it. Um, so it's hard to not jump on those deals when they're the best deals, and they pay the best dividend out of the bunch too. So it's like the best dividend is the most beaten down, which is when you want to buy it. But I will be allocating more funds towards Aflac. It is my original goal stock for the set of months. I just changed it because Aflac's $34 paying 28 cents. Exxon is $32 paying 78 cents or 87 cents, I think. Yeah. I think it's 87 cents. So Exxon is a no-brainer. It's cheaper and pays almost, I think, like close to triple the dividend Aflac does. So that's why I changed it, but I'm not worried about the headwinds for oil. Next, we're going to look at the watch list, which starts with Cisco, the food company, not the tech one. Um, at 50, about $55, it is definitely a buy. We got $30 of upside in the stock. PepsiCo at 134.65. Not quite enough for me to buy it yet. Kimberly Clark at 132 is definitely enough. Almost the $15 I need is there. This is one of the very few times in the past couple of days that Kimberly Clark has actually been at a buy for me. Colgate at 76, not low enough for me to buy, but cheap enough that I'd make an exception. Procter & Gamble is one of my top 5. I love the stock. At 137, though, not quite enough for me to be buying it. Essex Property Trust at 186. It's a steal at 300, so below 190 is like, wish I could buy it, sell a kidney for the stock. I think it's a great buy. It's a dividend aristocrat. They pay over a dollar. I think it's about a dollar, a little bit over a dollar for a dividend. And it's real estate, so very bullish on that sector. Then Black Hills at about 60, about 58. Definitely a buy for me there. Mickey D's at 214. We have enough upside today. That's crazy. Usually we don't. It's down huge. I didn't see any news. Two kid influencers are marketing junk food at McDonald's, Coke, and others to children. Oh, dang. Yeah, okay. Yeah, I don't know. I can look. I don't know if I want to cover the stories that are about McDonald's. But dang, guys, they got slammed today. I think this is the first time, maybe even ever, I've said McDonald's is a buy. That's crazy. Then Apple at 112 is a steal. I said it was a buy yesterday at 115, so lower, it's definitely a great buy. 119, I said it was a buy at 23 the other day, so 119 is a steal. Dang, that's a lot. A lot of stocks are a buy. So, guys, right now, of course, the three that I would be buying are FRT, AT&T, and ExxonMobil. And then on the watch list, it's Cisco. I'd buy Kimberly Clark. I'd make an exception for Colgate. Essex Property Trust is a buy. Black Hills is a buy. McDonald's, Apple, and Disney are all a buy. So, with that being said, guys, I want to say thank you so much for watching. Happy Wednesday. Like I said, hopefully everybody made some money in the market, even though I didn't. That's okay. I always wish better for other people watching. I'm a selfless investor. But with all that being said, there are some deals in the market, and I do encourage investors to go and research quality companies and really take advantage of fear in the market, of volatility, because you don't get companies like Kimberly Clark or FRT or even AT&T was up for a while. Like, a lot of these companies don't go on sale very often, so you need to make sure, and this is important too, to have cash reserves. I don't right now. I messed up. I admit my faults. I'm not perfect. If I was smarter, I would have a good 2 to 3K in the portfolio in free cash instead of 16. That should say like 1,016 or like $2,500 instead of 1638, because it's just as important to have money ready to go as it is. That's the key to investing, is always have something ready to go, and that's something that I need to do better on. But first, I'm going to reallocate towards my emergency fund. I need 3 to 6 months, and then I want to try to get a car fund. So I'm going to get about $10,000 saved, and then I will go absolute bonkers on the stock market. So I'm kind of irritated because the accident has made it harder for me to allocate funds towards investing, because that's not the right thing to do, and I need to build myself up and be more financially stable before I start actually investing. So for a while, it's just going to be dividends, but that's still going to grow my portfolio. But that's one thing that I definitely will encourage new investors to think about, is always have something ready to go. Always have funds allocated to be used in the market. So with that being said, guys, thank you so much for watching. Remember to hit the subscribe button if you enjoy the consistency here on YouTube. I just want to say thank you so much to all the subscribers, all the comments. They mean so much to me. I've had so many great comments and Instagram DMs and things of that nature. It really does help. It helps, mentally, and it encourages me. It encourages me. So I really want to make sure you guys know I do appreciate that. But with that being said, guys, I will see you guys tomorrow in another Robinhood portfolio update. Remember to hit the subscribe button, and I'll see you tomorrow. Take care, guys.